We're going to break down how banks really make money, how you can use that same exact system that they do legally and ethically to keep that power in your hands. How many of you want more control? By the end, you're going to know how to eliminate debt, multiply your dollars, and start a family bank that pays you. Imagine a world where every dollar you earn works for you. No more banks, loans, late fees, paying interest to someone else. You've weathered storms. You've built successful businesses and careers. You've hustled paycheck to paycheck, but they still hold all the power. Not anymore. Not after today. Let me ask you something. How many of you have ever felt like no matter how hard you work, the banks always seem to win? And how many of you have ever made your payments on time only to look up and wonder, why does it feel like I'm still getting nowhere? First, welcome. I want to commend you for showing up because most people, they never even question the system. But you're here, which means that you're uncommon and you're ready to think differently, to do different. And by the end of this session, you're going to walk away with the exact strategy that banks pray that you never figure out, that allows you to be your own bank, and how they're making tons, and I mean tons, of money on your money, stupid amounts, and a breakdown of how to eliminate debt without sacrificing your lifestyle, a blueprint for recapturing every dollar you're currently giving to someone else, and an immediate path to a tax-free legacy, even if you're starting late. See, I grew up thinking the banks were where you save money. I was groomed to give up control of my money, much the same as most people. That's just what we were taught. And once I saw and started questioning how much money they were making on my deposits and how little I was keeping and why we as a family were always stressed, always worried about money, angry, stressed, worried. But then I got smart. And this strategy that I started applying a little over 4 years ago has completely changed my financial future. It has flipped the script, if you will, on the banks. And now I get to help families do the same. And sometimes I pinch myself. I think, this is crazy. I didn't even know about this 5.5 years ago. And here I am helping thousands and thousands of families get started just like you. And today's about one thing, flipping the script on how you currently handle your money. No more playing sucker in someone else's game. We're going to break down how the banks really make money, how you can use the same exact system they do legally and ethically to keep that power in your hands. And by the end, you're going to know how to eliminate debt, multiply your dollars, and start building a family banking system, a privatized system that pays you and your family instead of everyone else. So if you're ready to stop funding someone else's dream and finally start funding your own, let's go. So let me ask you guys something. Exercise of imagination here. If you owned a restaurant, where would you eat? Where would you ask your friends to eat? Where would you bring your family to eat? How about if you owned a hair salon? You know, we're all getting haircuts this weekend. Where would you go get your hair done? Your hair did. Your place or someone else's? If you own the gym, right, where everyone pays and no one goes, where would you work out? Your gym, right? Of course, simple stuff. If you own the car dealership, where would you buy all your new cars? And finally, the reason you're here, if you own the bank, where would you do your banking? Today, I'm going to show you how you can create your own bank. And when you make your deposits, if you needed a loan, where are you going to go? And just like any other bank that you've ever dealt with, right? The banking that you're already using, you'd pay yourself back with interest, right? You wouldn't be a dishonest banker. Just like if you own the gym, you wouldn't let everyone come to the gym for free. No. Or use the equipment for free. You would charge what it was worth. And so it's the same thing. And this is what the wealthiest families have done forever. So let's talk about how the wealthiest have used this concept for the past 200 years to fuel their success and build and preserve their empires. And it's not rocket science. It's not complicated. It's not a new concept. And a lot of people are already using this strategy. And could it be that you don't know about it? just because they don't want you to find out about the secret that's hidden in plain sight. So let's talk about a couple of these people, right? Without whole life, without this concept, many of you would be bummed because there would not be any Walt Disney. You know, during the Great Depression, when Walt needed money and everyone said, a mouse, a duck? Are you kidding? That's the stupidest thing I've ever heard, Walt. Okay. Walt doubled down on himself, and look where we are today. Because he dared and he prepared, he has a different outcome. And then you have Doris Christopher. I didn't even know who Doris was, honestly, until I learned about this concept. But Doris doubled down on herself with her whole life loan. And now she sold Pampered Chef to Warren Buffett for nearly $1 billion, for 900 plus million dollars. And then finally, the ones that we're modeling to carry on generational wealth, the Rockefellers. They wouldn't be going into generation number 7, and we wouldn't be talking about the Rockefeller waterfall method if it wasn't for John D. Rockefeller's vision of what was possible. And the combination in his family of using the family office, tax strategies, wealth strategies, including whole life insurance, an estate, a trust, and having that system set up, not only the system, but the processes in place to pass it on from generation to generation, not just the money, not just the inheritance, but the systems and processes. You know, before we jump into this machine, because it's only 3 parts I'm going to be talking about today. Again, it's not a new concept, but remember what Will Rogers said. You know, that's right. The problem in America isn't what we don't know. It's simply what we think we know that just ain't so. Write that down. Take a picture of the slide. If you haven't seen this before, this is a powerful reminder to keep an open mind because you might not know something and the secret might be right in front of you in plain sight. And so let's go through this machine. What is this machine, and what is it, and what is it all about? And what is it not? Just importantly, what is it not? This is a point where a lot of people stop listening. You know, when I tell you what it is, a lot of people, if I was doing this live in front of you in an audience, they'd be getting up and going to the bathroom, and I'd be like, sit your ass down, right? This is where you have the talking financial gurus, the heads, the Dave Ramsey's, the Susie Orman saying, whole life is bad. Oh, no, you didn't. You didn't get a whole life. So what is this machine, and why is it so different? The machine is nothing more than a dividend-paying whole life insurance policy from a mutually owned dividend-paying company. Now, a qualifier here is this company has to have been profitable for well over 100 years and support this concept, because it makes a big difference when a company supports the infinite banking concept. And for those of you that feel a little uncomfortable right now, it's okay. Let's push through that discomfort and really focus, because we all know that when we get a little bit uncomfortable, what's that mean? This is where the rubber hits the road. This is where we're growing, because this isn't the whole life or the term insurance that your broke ass brother-in-law is trying to sell you. This is not something that Jake from State Farm can do. Sorry, Jake, you got pretty cool commercials, but you can't do what I do, and you can't do what an infinite banking practitioner can do. And so what is this not? Because I know this is not the only thing people see. So what is this not? I'm telling you right now that these things might have a place, but when it comes to your banking, we are not, again, we are not talking about index universal lives. We're not talking about variable universal lives. We're not talking about ULs, and we're not talking about terms. And I have actually heard some cases where all of these things may have worked and done a good job. So we're not judging these things as being bad or wrong or anything else. We're just saying, if you want to be a bank, if you want to do what the banks are doing, you're not using these vehicles. You're not using these vehicles because of how it's specially engineered, how it's set up for guarantees, and what it gives you, and how it transfers the risk to them, which is what we want. We all take on enough risk. We want to transfer the risk to them, and we don't want to assume any other risk in our life. Is that fair? And when I heard about this, I'm telling you right now, I was exactly where you might be. The ones that are new to this, the ones that put I in the beginning, I thought, that can't be true. I was pissed. I thought if this was true, mother bleeping, bleeping, bleep. I I called up my buddy. I read the book. I read this book. I always hold it up because this changed my life forever. I read this book and I thought, that can't be true. And don't be impressed. It's only 91 pages. I read it in an evening. But I read it the next day and I called my buddy up. And you guys have heard this, some of you. And I cussed him out. I said, Rep, what the bleep? I've known you for years, brother. Do you practice this? Do you know about this? He said, yes, Sip. I've been practicing this since 2007. I learned directly from R. Nelson Nash, and it took me 2 years to get started. He's a fiduciary with 40 wealth management offices. Some of you have taken 6 years to get started, and that's okay. You start when you're ready, because when I said, Rep, why didn't you tell me? I've already said, because I wasn't ready. And the teacher doesn't appear until you are ready. So do you know, and you might already know this, but do you know who the number one purchaser of this stuff is? Remember, we're done with the banks, right? But who's the number one purchaser of this specially engineered whole life? That's right. It's the banks. Look at the big three: Bank of America, Wells Fargo, JP Morgan Chase. Look how much bank-owned life insurance they own. That's incredible, right? That is some big, big numbers. And as of Q2 last year, the banks owned over $225 billion with a B, capital B, dollars worth of this specially engineered whole life. And you might be thinking, why do they own so much? How do they own so much? And what are they doing with it? It's a great question. This is more wealth in life insurance than they have in all of their properties and buildings combined. Think about that for a second. More money than all of their buildings and properties combined is in whole life. They have 4x the amount of whole life that they purchased since 2012. And by the way, don't believe a word coming out of my mouth. Not a single word. I want each and every one of you to do your own thinking, because it's your banking system. I guide, I support, and I bring you the truth from what I see, from my perspective, from what I've done in my life. So go look at this stuff. Go look up bank-owned life insurance. Go check it out. Go look at your bank. And you'll find that these facts are accurate. And these are, again, big numbers, huge numbers. And we have to understand the banks, they've been moving money and keeping money in motion way longer than any of us have been alive. They're smarter than I am. They're smarter than most of you. And all we have to do is mimic them. So how do the banks do this? How do the banks really make this work? Hey, if you're new here, thank you. Go ahead and smash that subscribe button. Yeah, just smash that thing. And I want you to then subscribe, ring the bell, because it might turn orange, as Connor Patrick says, so you get alerted to new content. Help spread this message. Help invite others to the Infinite Banking Bus. If you find this valuable, then bring other people here and share this knowledge with them. It's uncommon knowledge. It's what the wealthiest have been doing. And what I just showed you, remember where we just were? What are we here talking about? The banks are making a ton of money and we're done with them. Done with the banks. So let's get back into this and start going through real scenarios of real clients and how they taken back control by becoming their own banking system. So smash, like, subscribe, and let's go. So, when you go to work, when you trade your time for money, when you get paid, we get excited. Whether you're getting paid weekly, bi-weekly, monthly, you get paid and you're like, yes. Where does that money go? The money goes to their bank, over there, to their banking system. And then what's the bank do with your money? What do they do with your money? Like, you've given them, say you deposit $100,000, they're paying you 4%, which is a pretty good bank, mostly online banks at that rate today, but you're getting paid 4%. Does the money just sit there? Is this a liability or an asset to the bank? If you thought in your mind that it is a liability, you're right, because the banks are on the hook to pay you. So now what's the bank have to do? Someone needs to purchase a home. They haven't saved up their money to buy the home with cash. So what do? They finance it. They take a loan from the bank. And when they pay the seller, what does that seller do? the money goes out and it comes right back. Watch the motion every single time. It's like I'm swimming here, I'm going in circles. And now, because of our psychology, we've got this beautiful new blue home, call it 3,000 square feet, a 5.3, luxurious neighborhood, gated neighborhood. But now we can't drive this beater anymore. We're going to hide the beater in the garage and we're going to get a Beamer, right? We're going to get a Beamer. And because it's a shorter loan, the banks are like, yeah, we'll give you another loan. Here's an 8% loan. So we give it to the dealer. And what happens? The money goes out and it comes back to the bank. Each time, where is it being deposited? In the bank. And then from there, your wife, maybe your husband, are like, you know what? This is a nice home, but we promised the kids a pool. I had this conversation earlier today. We promised the kids a pool, or I need a bigger kitchen to entertain in. You know, this range, this stove, this is old stuff. I need that new stuff. So we do a home remodel. The banks loan the money out for the home remodel at 9%. The money goes where? To the contractor. The contractor's deposit the money somewhere. Where does it go? Back to the bank. And then we're on top of the world. We're doing so well. And we want to splurge a little bit. We want to celebrate. We want to get some other new stuff. And maybe we go to Vegas and we put it all on red and it hits black. And now we've got debt that's charging us an average of 24.5% right now. We're like, you know what? 12% debt consolidation, that sounds pretty good. Let me do one of those. Let me save the other 13%. And so we take that out, and that money we pay the credit cards, where does it go? Back to the bank. So every single time we're making 4% on our money that we earn, that we put in the bank. Look at the banks. They're making 7%, 8%, 9%, and 12%. Let's kind of look at how much more money are they making than you using whose money? Whose money are they using? Your money, our money, not theirs. How much risk has the bank taken on? Very, very little. Very little. So in the home, they made 3%, right? 7 minus 4. In the car, they made 4%, 8 minus 4. With the home remodel, 9 minus 4 is 5. And now with the refinance, after we landed on black and we bet red or the other way, 12 minus 4 is 8. 20% is when you add all of these up. So is 20% more than 4%, right? Let's go through an exercise of logic. Is 20 more than 4? Yes. How much more? Is it 16% more or is it 5 times more? If you answered 5 times more, like 4 times 5 is 20. It's 5 times more, which is 500%. So while you are making 4% on your money that you earn, that you deposited in their system, they're earning how much? 500%. And they do this all day long, every day, always, forever, making somewhere between 400 and 1,300% on our money, on your money. And if you've already seen enough that you know, hey, Jason, I need to have this conversation. How can I be my own bank? I want to take back control. I want the guarantees. I'm ready to get going. I just saw this for the first time, or maybe I need to expand, scan the QR code. My beautiful Mia Moore will pop it in the chat how you can grab a call with me, a free call, where we'll dive into your numbers and really help you think through your own system. With all of that, go and research this as well. The banks make between 400 and 1,300% annually on every dollar you deposit in your banking system. If that has you a little bit pissed off right now, good. Anger can get you to act. It can get you to take action. So feel that anger. Be a little disgruntled like I was. It's normal. You go through a grief stage. And what are we talking about again? Did you guys forget what we're talking about? How to stop using their bank and build your own. The banks are counting on our human nature just to keep us keeping up with the Jones. And think about how much money I just showed you that they're making on our money. What we are essentially, each and every one of us that use their system, we are bank employees that are out working the fields, bringing the harvest for them and saying, here you go. Thank you. Thank you. Go ahead and sell it for profit. I'm good just being able to get by. And so every time that you rush to get that car, that house, that remodel, you swipe the credit card, you sign the loan paper and you agree to 7%, 10%, 12%, 24.5%. You're saying, I'm okay making them rich. I'm okay making them rich. I'm not going to wait because I need it now. And here's the kicker. You all can be your own bank. Again, it's simple, it's legal, and it's available to all of you. You could be the one collecting the interest instead of paying it. And when you realize how simple this is, changing that one thing, you'll wonder why no one ever told you sooner. So let's look at a real client. Let's look at someone that is currently just starting this, and her name's Jessica. And so let's talk about Jessica. So Jessica came to have a conversation with me. She's a real estate agent, and she just received an inheritance from her uncle. And it was about $60,000 or $50,000. And her and her husband don't have a lot of debts, just a few. They're not investors yet. And Jessica really wanted to be a good steward of her money. Okay. I'm painting the picture of what she's trying to accomplish so I can walk you through the thought process that she and I created together for her. And he left her money because she thought, or he thought, she was the most responsible of all of her siblings, and all of his kids. Like, he didn't want to leave any money to them because they weren't responsible. They had some challenges in life and with money and with other things. And so she feels this need to carry on his legacy. And it's almost like the parable of talents, where she feels like she's been given this gift and she has to cherish it, nurture it, and grow the gift. And we went over everything. We found out that she has a couple debts. Like, she didn't know what she was going to invest in yet, so we could deposit it. She could have the money accessible for small money movements, for lending, for other things. But she didn't know what that looked like. Part of her just wants to give the money and split it between the five siblings, but she also knows that's not what her uncle wanted. So what we did is we just changed the one thing where her savings were being held, and we directed or redirected the inheritance into the policy after we did this thorough evaluation. And this is what we built for. We put in 60,000 on day one, and she had access to over $54,000 immediately. And you'd be like, what? Jason, where's the other $6,000? That's not very good. 92%. Typically, when we're overfunding, we have access to 80 to 90% of it. And she's 41, she's healthy, and we set it up so she can do $833 a month starting in year two. But look what happens in year two. She puts in $10,000 and she already has hit the efficiency point and has an extra $323 of cash value. And now she's going to use this system. And I'm going to click through this and show you, this is her real scenario. This is Jessica's scenario where her no plan, and I want each of you to make a plan. So I want each of you to make a choice here to move money like the banks do, protect her family, and make a choice for yourself. Play along as if you are in Jessica's shoes. Because Jessica and her husband were paying $872 a month to Ford and Dodge. They had 77 months left on their loan, and that was just to get debt free. That's zero wealth building, and they're going to pay a little over $6,000 in interest to the third parties, to the people making money on their money, Ford and Dodge. Now, Jessica said, well, what's the other strategy? What's the alternative, Jason? And we mapped it out. We said, okay, let's go in. Let's build this specially engineered whole life policy for you. Let's build it where it's manageable for the future. Let's build it where it's meaningful for the future. And what we came up with, it's going to take her and her husband 10 months to pay off the debt. Remember, you're picking A or B. So A is the common way. B is the uncommon path, the less chosen path. But let's look at what B gives Jessica and her family. In B, 10 months to pay off the debt and another 67 months to refill the machine, to pay her system back. And now, over that time, she's going to pay a total of the same 77 months. She pays a little bit more in interest, right? So it's not all, there's trade-offs. She pays $8,300 in interest. But at the end of that 77 months, Jessica has $117,000 of tax-free cash. And she has almost $1 million in tax-free legacy. So the common way, what most people are doing, none of you though, But what most people are doing is they're picking the common path. They're going to keep paying the banks extraordinary amounts of money, sums of interest over time, versus changing one thing, simplifying their life, and taking back control. You guys had to make a choice. Do you want to go the common path? Like Warren said, if poor people would just do what rich people do, they wouldn't be poor anymore. I don't know if Warren ever said that, but how powerful is that statement? Do you pick the common path or the uncommon path? And now I want to show you how the flow of money works. Let me stop sharing for a moment. But I want to show you how the flow of money works, because you might think, well, how does this system work? Where do you insert the infinite banking process? And by the way, I almost forgot to share this. And so how does this flow? And tell me in the chat if you can't hear me, I'll try to stay close to this. But the flow of money, so we set up the whole life policy right here. This is the 10K a year annual with a $50,000 overfund with $54,000 of cash value right away. To pay off one of the vehicles, it was $47,000. So you set up the policy. Within 30 days, you take a loan and it flows to where? Your segregated account. Segregated is a fancy word for separate. That's all it means. It's just a regular checking account that you're only using for your banking system, whatever you call your banking system. So the money flows into here and it goes over here, and she was paying 5% to Ford over that period of time. So now, as soon as she makes the decision to take over this valuable asset here, now she owns this debt, and she's going to be the honest banker. Because why? Because like I showed you at the beginning, if you own the restaurant, if you own the gym, if you own the bank, you're going to be an honest practitioner, an honest patron of your system. And so now Jessica takes the $650 a month that she was paying Ford. It includes this 5%, and she starts paying it back to the segregated account. And the way she paid off the other truck or the other vehicle in 10 months is that money sat here in the segregated account until she paid off the second vehicle, which I'm not showing you this whole thing. And now she flowed that money on top of it back into the segregated account. And then it comes back to recapture and go back into her banking system. And this is how she built up over time the $111,000 in the same 77 months. That is the difference of being a wealth builder or being a slave to their system. It is that simple. Take a photo of that. My scribbles, powerful scribbles, are there for you. You go back and revisit this at some point. If this clicked for you today, even a little, the light bulb went bing. Don't sit on this. Book a free call, ask questions, run the numbers, share your scenario, because people who win in the financial cycle aren't the ones with the best jobs, the biggest 401ks, or even the best savers. It's the one who know how to move their money smarter. You're not here to play the game. You're here to own the bank. So let's make that happen. Again, what did we cover today? We covered how to eliminate debt without tightening your belt, without working harder, how to turn liabilities into assets, how to build generational wealth using a 200-plus-year-old system and strategy that the banks themselves rely on. This is the financial foundation of our country. And I told you my story for a reason, because this shift changed everything to me. I've been grateful and honored to serve thousands of people at that point. And 5 years ago, I didn't even know this. It can be the same for you. You can train, teach, and test this message and share it. And again, you're here because you're done with being the one who is paying them money, working for your money while other people make money on your money. I pulled back the curtains. I showed you the structure the wealthiest families use, the biggest banks use. And now you've got a way to build your own family bank. Eliminate that interest payment, multiply the money with investments, making a spread on the money. Because what I showed you up here on that chart is you're making money in two places, recapturing the interest, and at the bottom, when you're paying back the loan, because you're increasing the spread down there as well. So book the call, run the numbers, ask the hard questions, because once you see this, you can't unsee it. And once you start, you never go back. So if you got any questions, now's the time to pop it in the chat. Let me know if there's anything else that popped up today that I didn't answer. As always, I'm super honored and super blessed to be here. Next week, I have a special guest coming to join us. Don't miss it. He's always dynamic. He's always bringing actual case studies and sharing real world scenarios, things that relate to you. He's got a young, less than a year old son, and he's going to share some of those tricks of his system with each of you. So make sure you're here next week, and I'll be back the week after that to keep serving. If there's something that you guys want to learn about, something particular that you want me to talk about and expand upon and show case studies, just ask. Send Patty and I the messages because we love it. We love you guys. We want to keep serving. We're super blessed that you're here. By the way, if you're looking to improve relationships in your life, if you're looking to have more people look at you as someone that is always adding value, bring them here. Every time that you introduce something that can positively affect someone else's life, if someone's trying to get healthy and you introduce them to a new diet system, guess what? You've added massive value and you didn't do anything other than make the connection. Remember, this is the big ass infinite banking bus that we're running here. People can get on the bus, they can get off the bus. You know, they pull the little thing and the whistle goes off. I'll stop and they can get off. But you bringing them here will add value. It'll deepen your relationship with them because now you are a trusted source of good, sound teachings for them. And again, once you see it, you can't what? Unsee it. Old Warren Buffett might have said this: if poor people would just do what rich people do, they wouldn't be poor anymore. Profound. If today this clicked for you, even a little, don't sit on this. Book a free call, ask questions, have your strategy session, run your numbers, because the people who win in the next financial cycle aren't the ones with the best jobs, the biggest 401ks. It's the ones who know how to move money smarter. And you're not just here to play the game. You're here to own the system, be the bank. And today we covered how do you systematically create your banking system? How do you eliminate debt without having to tighten your belt, scrimp and save, pinch pennies? How do you turn liabilities into assets? And how you build generational wealth using a 200 plus year old strategy that the banks themselves rely on. And I told you my story for a reason, because this shift changed everything for myself and my family. And it can do the same. It will do the same for you if and only if you act on it. And you're here because you want more. You've been the one doing the work, making the money, and letting the banks make money on your money. And we pulled back those curtains and showed you how much money. Profound, sick amounts of money. And it's the same structure the wealthiest families, the corporations, and the biggest banks use every day. Now you've got a way to build your own family bank, eliminate interest payments, and start capturing the cash flow that's been slipping through your fingers. Again, you're at a choice. You can go right, you can take A, the common route, or you can go right, B, the uncommon route, and book the call. Most people aren't going to book it. My calendar does fill up really quickly. I can only run so many calls and have one-on-ones with you, with so many of you. So scan that QR code, have a conversation with me, and let's see what it takes to become your own bank. Because once you see this, you can't unsee it. And once you start, you never go back. Again, smash the like button, subscribe to the channel. Many of you are watching this content, but not subscribing. We need to spread this message. Invite as many people as possible to the big ass infinite banking bus. And I'm going to see you in this next video right here, where you can keep learning with me and keep seeing how you can take back control of your money by becoming your own banking system using this 200 plus year old strategy. So as always, I am so grateful for your time, your energy, your focus. I'm not confused. That is your most valuable asset, and you have blessed me with sharing that time with me. I hope this somehow serves you and your journey. I look forward to helping you further and being on the journey with you. So until the next time, I'll see you here in the video. Be blessed.